Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever time zone you are tuning in from. Well, I'm very excited to welcome you all to yet another promising edition on the Forex Morning Mastery, your daily dose of financial insight and trading strategies. Well, today is Wednesday, in fact, the midweek, and of course, we are beginning to prepare for the second half of the week. And of course, this is one of the most important days of the week as we see market try to recalibrate their stance in preparation for the second half. And of course, we are here together to look at the market and see how we can strategically position ourselves for the next move using our basic tools such as the economic calendar, trend lines, key levels, and of course chart patterns to unravel the potential trajectory for price action today. And before I go even further, I would like to appreciate every single one of you who have taken your time to wait for the session, as I had some technical issues and I needed to sort them out so that we can have a sweet experience during the Forex Morning Mastery. So thank you very much, and I really appreciate your patience. For those of you who are actually joining us for the first time, who are wondering what this is all about and what is it that we really do here on the Forex Morning Mastery. Well, on the Forex Morning Mastery, the Forex Morning Mastery was an idea born out of the necessity to do follow-up details on my weekend videos. During the course of the weekend, I usually share a couple of videos which shares sharing my insights into the market and what I think is likely going to be happening in the coming week. So out of the need to do follow-up details, the Forex Morning Mastery was born, and as technical traders, we usually gather here 3 times in a week, that is Mondays, Wednesdays, and Fridays, to come together as a community and engage in follow-ups and reviews of our current positions in preparation for both the London and New York session. And I would like to emphasize here that this platform, the Forex Morning Mastery, is not a signal service platform, but instead it's an avenue where we all come together to have a deep insight into the financial markets, into the assets we are looking at for the week, and of course, depending on whichever type of trader you are, scalper, day trading, or positional trader, or even swing trading, we are here to identify potential entry points using the historical data we have on the chart. And of course, you can use that information to strategically and make your own independent trading decisions. My aim here is to equip us all with the knowledge and skills necessary to make informed trading decisions independently. And trust me, the more time you spend with us in this community, the better you get to understand my analytical approach, which eventually will help you in enhancing your own trading decisions and strategies. So once again, I very much welcome you on board and encourage you to actively engage in the comment section. So my own name is Sheriff Daramola, and for the next 40 minutes thereabout, I'm going to be your host, as I will be taking you on a trading journey where we shall be evaluating the financial market together. And I encourage you to stay tuned in, as we have quite some interesting trading setup that will be guiding our trading decisions for today. I see your comments in the from Flow Ride. Good morning to you. Glad to have you around. I can see the Ghost Trader. What a name! I love that. Good morning to you. And Celestine Okechukwu. Good morning to you too. Very much glad to have you around with us this morning. So with that being said here, I hope the sound quality is quite good, because it's one of the issues I've been trying to sort out in the last 30 minutes or so. Please let me know in the comment section if the sound quality is good, and if it's a little bit harsh, please let me know so that I can do the necessary adjustments so that you can have a better experience with me this morning. Salami Olumide, good morning to you. Thank you very much. Hello, Wokocha Kingdom. Good morning to you. I was asking the last time, is it the same Wokocha I know, or is it different Wokocha? Please let me know in the comment section. All right, Flow Right. Thank you very much for your feedback. I really appreciate that. So with that being said here, let's dive right into the business. And as usual, the first thing we normally do, of course, is to keep tabs with the fundamental factors that will be influencing the sentiment in the market today. And of course, you know how we do it in this community. We want to be checking on the economic calendar on a daily basis, as it gives us an insight into what majority in the market will be looking at to make an informed trading decisions. And by checking on the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and, most importantly, timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the assets we are looking at for this week, we are going to be focusing on high impactful event from both the United States and the United Kingdom economic docket. However, for this week, there are no high impactful event from the United Kingdom, so it's more or less the United States economic docket data that will be driving the sentiment on the asset we are looking at for this week. Now, we've had some we've had some important events so far this week. Like on Monday, June 3rd, we had the ISM manufacturing PMI report. And for those of us who are not familiar with this, the ISM manufacturing PMI report is a significant economic indicator that gave market participants an insight into the health of the manufacturing sector of the United States economy. And from the data, and before I go into the data, it's very important that we understand how the gauge works. So the PMI report comes within between 0 to 100, and anything below 50 is considered as a contraction in that sector, and anything above 50 is considered as an expansion in that particular sector. However, in the last couple of months, the manufacturing PMI data hasn't broken that 50 mark, giving us a sign that it's still struggling to gain some stance in the last couple of months. And the expectation for the month of May was projected at 49.6, but lo and behold, the data that came in on Monday recorded a 48.7, which was lower than the consensus expectation, and of course lower than the previous month. And to top it all, it's even lower than the 50 mark, showing us signs that the manufacturing sector is struggling in the United States. So for us, this is a very significant information, especially following the last couple of weeks where we have been seeing not too encouraging data from the United States, from the CPI data to the consumer sentiment index, and of course we had some labor data in the last couple of weeks which showed signs that inflation is gradually thinning out and the economy is sluggish at this point in time. And this has led to the initiation that we might likely be seeing interest rate cuts anytime soon, as the monetary policy tightening has been very effective at this point. However, the remarks from the Fed officials lately hasn't been encouraging that idea in the moment, as the Fed officials are still considering to keep a wait and see approach, where they would likely going to be keeping the higher interest rate for another extended period of time, just to make sure that they have significant data to really show that inflationary pressure is thinning out. So At this point in time, the market is in a limbo. We are not sure what is really going to happen. So as a result of this, today's economic data is one key event that everyone will be looking forward to, as it's likely going to be giving us an insight into the potential trajectory of the Fed's monetary policies. So for today, Wednesday, June 5th, we have a couple of high impactful events from the United States, and of course one of them is a labor oriented data, which is the ADP employment change, which is coming up in about 3 hours from now. So it's important for us to mark out the timing so that we can be around to monitor and strategically position ourselves for that next move. Now, for those of us who do not know what the ADP employment change is, well, this is a monthly economic report that provides the market with an estimate of the change in non-farm private employment in the United States. And positive ADP figures usually indicate that there is growth in the job sector, and it often boosts the market sentiment as they suggest a healthier labor market, while a negative figure may lead to concerns about economic slowdown and weigh in on the market sentiment. Now let's look at what the data said last month, that is the month of April. If you look at what we have here, the previous data came in at 192,000, and based on what is on ground right now, economists and market are expecting a decline in the ADP employment change, which is projected at 173,000. So that's about 20,000 decline from that. So it's showing us signs that market participants are not really confident in that sector. So we are going to be looking forward to see what the actual data will be. Will it be just as expected, below expectations, or even beyond expectation? But let's bear this in mind, that if the data comes in higher than expected, it is likely going to be pushing the US dollar higher. So since we are monitoring US dollar based assets, it may favor a positive traction in that regard. And if the data comes in below expectation, then we may likely see a decline in the US dollar. And of course, you can see in the last couple of days now, the dollar has been consolidating, as I still think market participants are, major key players in the market are stepping aside, waiting for this data to come in before making any directional bets. Then in about 5 to 6 hours from now, we are going to be looking at the ISM Services PMI, which is considered to be another key economic indicator that measures the performance and expectation of the service sector in the United States. And obviously, a higher than expected data today is typically going to give a signal of economic expansion, hereby boosting the sentiment in the market positively. So if the data comes in higher than expected, we are looking at a positive traction in favor of the US dollar. Now, like I told you earlier, the PMI has a gauge between 0 to 100. Anything above 50 is considered as an expansion in that sector, and anything below 50 is considered as a contraction. Now, looking at the data we have here, for the month of April, it came in at 49.4, just like 0.6 below the 50 mark, and market participants and economists are projecting a 50.5 for the month of May, which is a little bit encouraging. So let's see what the data will say. Will it be just as expected, below expectation, or even beyond expectation? And whatever it comes out with will definitely influence the sentiment in the market. So for today, Wednesday, June 5, we only have two high impactful events that we are going to be looking forward to today. So I encourage us all to mark out this timing so that we can be around to prepare ourselves in anticipation, and of course in response to what the data will be. And as a technical trader, we do understand that the anticipation of high impactful event like this has a way of influencing the sentiment in the market, giving us an idea into what is likely going to happen. I usually mention this in this community that major key players in the market usually have inner circles in this department that gives them information prior to the event. So as a result of this, they have some information beforehand, though it's an illegal practice anyway, but they do have some information beforehand, and this helps them to build up a position ahead of this event. And the build up of this position usually reflects on the chart as price action, coming in as technical structures and patterns that we as retail traders can actually use to strategically position ourselves for the next move. And that is exactly what we are going to be doing today, using our basic tools such as the trend lines, key levels, and chart patterns to understand the behavioral patterns of market participants, and of course use it to position ourselves for the next move. So I see a couple of comments more here from John Alabi, Celestine Okechukwu, good morning to you. Simon Bayoni, good morning. It's been a while since I saw you, Simon. How are you doing today? Glad to have you around with us. Hello, Rex. Is it the Rex I know from Indonesia? Is it Indonesia? Okay. I hope you are the one. Glad to have you around with us this morning. Okay, all right, very, very glad to hear that. Hello, Sharif Abdulkadiri, my namesake, good morning to you. Oh, Rex, it's been a while. Glad to have you around. And how's the family over there? Good morning, Adeni Babalola too. I'm loving the energy this morning. Salami Olumide, good morning to you. Glad to have you around with us this morning. So without taking too much of your time, let's dive right into the business. So as usual, the first asset we normally look at is, of course, the USOILSPOT, and in fact we've had a tremendously profitable week on this particular asset. Remember, we have been selling this asset since the beginning of the week, and along the way we were able to scoop in over 320 pips on this particular asset, though we were not privileged to have multiple entries in this case scenario, as we only had one sell position. But for those of us who had multiple entries, all well and good. But I do hope you are able to capitalize on this bearish momentum. And for the sake of those who are joining us for the first time, and for educational purposes as well, let's quickly run through what really happened at the beginning of the week and what led to the decisions we made. Now, before I go into the details, I want to emphasize that during the Forex Morning Mastery, we only focus on the 1 hour time frame, which is our execution time frame. Now, for those of you who in some way or the other you missed out on the our top-down analysis on Monday, you can check the link right in the description box of this current video to refer to that video, so you can have a background knowledge of how we actually got to this point you are seeing on the 1 hour time frame. So at the beginning of the week, after analyzing the 4 hours time frame to have an holistic perspective into what is going on in the market, remember we had our key level for this week situated at the $77 area. Now, for those of you who missed out on our session on Monday and you do not understand how we were able to identify this key level, please go ahead and watch that video after the session to have an insight into this. And we all know how important this key level is, as it guides our trading activity for the new week. Now, if price trades above the key level, we look out for patterns and structures that support the idea of buying. And if price drops below the key level, we look out for patterns and structures that supports the idea of selling. Now, during the first 10 to 12 hours thereabout, at the beginning of this week, we saw a situation where price action was oscillating right around our key level. And as a result of this oscillation, we saw price action confined within a range between the $77.35 level and the $76.50 area to give us an insight into the prevailing uncertainty in the market at that particular point in time. And of course, you know how we use our range bound structures in this community. Whenever we identify them, we know that there is an indecision going on at that point. Hence, we exercise patience and wait for the market to finally make a directional decision, which usually comes in the form of either a breakout of the resistant line of the range to give us an opportunity to buy, which obviously never happened, or the breakdown of the support line of the range to give us an opportunity to sell. Now, with the information we gathered here at the beginning of the week, we positioned ourselves at both ends, the resistance line and the support line, waiting for the market to give us a signal, and lo and behold, we saw price break down the $76.50 level, remember, and we talked about how this $76.50 level shares a beautiful confluence with the resistant line of that descending channel we identified on the higher time frame. So we saw our price broke down both structure, and we had a couple of retests on our lower time frame to signal our first sell position for the week. And fortunately for us, we were able to ride that momentum all the way down, scooping in over 320 pips. So like I said earlier, the market wasn't able to give us the chance to have multiple entries, but thank goodness we were still able to make some significant profit on this particular asset. And for those of us who are part of this profitable journey, well done and kudos to you. So during my yesterday's commentary on this particular asset, I begin to notice that after price action tested the $72.50 level, we begin to notice some bullish traction emerge from that particular area. And what I did here to have a deeper understanding into what is going on in this market, I scaled back up into the 4 hours time frame, where I wanted to see how this level is significant to the holistic picture in this particular market. Now, when we scale up into the 4 hours time frame, look at what we have here. I'm not sure why this is rolling. Okay, so look at what we have here. So for those of us who are part of the analysis on Monday, you will be familiar with this current structure. We had a descending channel, and look at the $72.50 level here. Look at how it has played a significant role in determining the direction of price action since the month of November of last year. In fact, it has been a major demand zone, as you will see here. And one other thing that makes this level very interesting, it is how close it is to the support line of that descending channel, that support line of the descending channel right here, though it's not yet touching it yet, but it's very, very close to that area. Now the question for me at this juncture is, will price action test the support line to incite another wave of bullish momentum, something like this? Let me give a visual representation of what I'm talking about. Maybe it will come into this area, which is about let's see, we still have about 100, is it over 100 pips if price will test that area before another wave of bullish momentum will happen. So that is what I was looking at yesterday. However, when we begin to notice buy pressure resume around the $72.50 level, and considering the fact that that level had been a strong demand zone in the past, I was of the opinion that if price sellers find it difficult to break through that structure, we may likely be seeing the beginning of another wave of bullish momentum. So as a result of this, I was able to find a resistant line around that area, as you will see here. Let me zoom in so that we can see things clearly. So we had a resistant line around the $73.25 level, as you will see here. So it's up to approximately a $1 range bound structure. As you will see, price action had been confined within this area and the $72.50 level in the last 24 to 36 hours, giving us an insight into the prevailing uncertainty in this market. And of course, with the hopes that this could be another platform for buying opportunity, I had a buy position triggered at this point in time, though it is currently running in a loss, and it appears that we may have this position stop us out in a loss on this one, but we are still well and good, as we are only leveraging on the some of the profit we made so far this week. So we're still going to be on the positive side of our portfolio if we get stopped out on this current buy position. Now, before we go further into the details, into the structure, let us look at what the driving factors are. What are the things that are driving the sentiment behind the scene? It's very important for us to have a deep understanding into this. So on Monday, I did share with you some of these factors, but let's, for the sake of those who are joining us for the first time, let's quickly look at the latest development that is happening in this market. Now, one of the latest development that happened, which we have not talked about, is the API report, that is the American Petroleum Institute weekly crude oil stockpile report that came in yesterday. And we surprisingly had a substantial increase of over 4 million barrels in crude oil stock for last week, and this was in stark contrast to the previous week decline of 6.4. Remember, the previous week we were talking about a decline in stockpile, but right now we're having a surge and increase in stockpile. So what does this simply mean, and how does this influence the sentiment in the market? So when we have an increased stockpile in the market, it means that supply has increased and that the demand in the market is not enough to eat into the supply. And usually when supply increases, what happens? Price of that commodity or asset definitely is going to drop. Now, with the situation we have here, and with an increased supply resulting in a surge in the crude oil stockpile for last week, and the path of least resistance for USOILSPOT is looking bearish. So there is a high chance that we are going to be taken out of this buy position and get a sell position triggered if price breaks down the support line of that range bound structure we identified between the $73.25 and the $72.50 area. Then another factor that is going to be, that is also further supporting the downtrend in the US oil market, is the OPEC Plus decision. Remember, on the June 2nd, that was this last Sunday, OPEC Plus had a meeting, and from their meeting they resulted that they will be extending the majority of production cuts until 2025. However, they allowed some members of the OPEC Plus to increase their production cuts to over 500,000 barrels per day, and this could lead to more supply in the market. And they projected that by 2025 they will have an increased supply into the market, tuning to about 1.8 million barrels per day. And of course, for me, increase in supply, we know our simple economics tells us that price is definitely going to drop. So these two factors I just explained here is a determinant factor for selling pressure, exerting pressure on the crude oil market. So the path of least resistance is looking very bearish on this market. However, we cannot ignore the potentials of buyers as well. Remember, we still have this escalating tensions in the Middle East, which is still ongoing. There's been a back and forth as regards to a resolution on this one. Israel accepting, Hamas accepting, the US supporting the resolution, and Israel saying no, they are not going to be accepted. So this tussle here is also going to be influencing the sentiment. And if the escalation continues, this might increase concerns as regards to oil disruption from this particular area. Remember, the Middle East is one of the leading supplier of oil in the world, and if this happens, we may likely see surge in oil prices. So we are going to be taking this information in correlation with the technical structure we have on the chart. Now, looking at things from a technical standpoint, our center of focus for the second half of the week is going to be between this range bound structure that we have here between the $73.25 level and the $72.50 area. And of course, you know how we treat our range bound structure. As long as price action remains within the range, we know that there is an indecision going on, and we need to exercise patience and wait for price to either break out of the range, giving us an opportunity to buy, or the breakdown of the support line of the range to give us an opportunity to sell. And like I said earlier, we already have a buy position running at this point in time, and let's see if this buy position will remain valid. But one thing I would like to say here, if it so happens that this momentum becomes much positive and it increases as soon as price breaks out of the $73.50 level, please let's kindly move all our stop losses and secure this position, move it to break even, so that the worst case scenario we have on this buy position will be a break even if sellers finally take over this market. However, if this buy position does not become successful and instead we get taken out in a loss on this one, a breakdown of the $72.50 level would be a beautiful opportunity for us to join the decline to the downside. Now, another thing I would like to I'm beginning to see here is, how is it possible for us to join the decline even before the breakdown of the $72.50 level happens? Now, the reason why I am thinking of this is simply because of the strength of the sellers in this market. So like I said earlier, based on the fundamental factors we looked at, the path of least resistance is looking very bearish. Now, if we bring out our line chart and of course we connect the series of higher lows, here we have something like this. And let me bring back our candle chart. You can see price had already broken down that ascending trend line that we have here. Now, if it so happens that price comes back to do a retest of the trend line where continued selling pressure persists around that area, I'm of the opinion that we have a good opportunity to join the decline and then add more positions at the breakdown retest of the $72.50 level. But trust me, I will be with you in the comment section of both my trading view and Telegram platforms to give us updates as at when due. So this is my simple view on the US oil spot today. We have a simple trading setup to guide our decisions for today, as price action is confined within a range bound structure. Let's see how the market is going to be reacting to this area. Now, we should also take note that the upcoming US macroeconomic event that we talked about today is also going to be playing a significant role in this particular market. Remember, the US oil spot is a US dollar denominated asset, and whatever happens to the US dollar will definitely influence the sentiment in this market. Now, if the US macroeconomic data today comes in positive, this will influence the US dollar, which will increase the value of the US dollar. And you know, when the value of the US dollar increases, the demand for US oil reduces. Now, what does that mean? Well, if the value of the US dollar increases, other currencies will find the US oil spot expensive to buy because they will need to convert their local currency into the US dollar, which is already increased in value. So it becomes expensive to buy the US oil, and this will limit the demand for this commodity. So this is how it affects the asset. So we are going to be looking at how the market will be anticipating this event. If we have a retest of the trend line, then we'll prepare for selling opportunities. And like I said, I will be giving you updates on both my TradingView and Telegram platform. If you have any questions whatsoever, or you need some further clarifications, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. And do not forget to give that video a thumbs up. Your likes are very, very valuable to me, and in fact it also helps the algorithm to push the video to a wider audience of traders who may find this content beneficial, and of course that will help the community to grow. And thank you very much as you do so. So let's make the like tally with the number of people we have on board. See you in about 10-15 seconds from now. All right. Thank you very much, guys. From Adini Babalola, thank you for the support. Thank you, Flo. Right, I'm really grateful. And thank you, everyone, for the likes. We have about 16 likes right now, and we have over 20 people on board. Please, let's make the like tally with the number of people on board. If you have found this content helpful and useful in making your independent trading decisions, kindly support this community to grow by giving that video a thumbs up. So in the absence of no further questions, I want to assume that we are all on the same page at this juncture. So at this point, we shall be moving right into the next financial asset on our watch list for today. Stay tuned in, guys. Alright, so the next asset we are going to be looking at this morning is the GBPUSD, that is the British pounds against the US dollar. And so far this week we've done fairly well on this particular asset. Remember, we bought this asset at the beginning of the week, and during yesterday's trading session we were able to capitalize on another bullish traction after price action retraced into a crucial confluence that we identified I think prior to the New York session yesterday, and I did updated us. For those of you who were with me on both my TradingView and Telegram platform, you will know what I'm talking about. Now, before we go into the details on our plans for today, let's quickly run through what really happened at the beginning of the week for the sake of those who are not part of our session on Monday. And additionally, it will also serve as an educational tool for every one of us. Now, at the beginning of the week, after identifying our structures on the higher time frame, remember we are only going to be dealing with the 1 hour time frame. If you do want to have an insight into how we got to this point, please check the link right in the description box below to have an idea into how we got here. So at the beginning of the week, we had a range bound structure. Remember, we saw before the range bound structure, of course, we had this descending trend line right here, and then we had a descending trend line right here. And then we also had our key level, which was situated at the 1.27 area. Now, for those of us who have been with me for a while now, remember this $1.27 area has been a significant level for us. For about 3 weeks, we have consistently used this 1.27 area as our key level for every week, and it's also serving as our key level for this week as well. Now, to a quick reminder, our key level serves as a yardstick to guide trading activities for the coming week. Now, if price trades above our key level, we look out for patterns and structures that support the idea of buying, except for rare cases where the structure states otherwise. And of course, we are flexible enough to transition into the opposite direction as well. Now, at the beginning of the week, for the first 10 hours or so, price action was confined within a range bound where we saw how that trend line, that descending trend line, served as a yardstick to negate bullish attempts. So we had the range bound structure for the first, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 hours of the week. Price was confined within that range bound structure, and of course, you know how we treat our range bound structure. We wait for price to either break out of the resistant line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. So personally, I actually missed out on the breakdown of the support line due to me coming into the market late. And of course, some of us took advantage of that opportunity. And if you remember vividly, I said here on Monday that for those of us who are capitalized on the breakdown of the 1.27355, that is the support line of that range bound structure, that we should move all our stop losses and secure that sell position, because anything could actually happen. And for those of us who missed out on Monday, I mentioned here that it appears that the week is starting on a bearish note, and we may likely see price come back to retest both the structure and that ascending trend line to incite a sell-off or a trend continuation to the downside, as you see the trend line right here. Now, the only condition we said will make us join the bearish move is to identify a reversal pattern around this area, maybe like a double top structure, head and shoulder, or even a rising wedge before we can jump into that sell position. And obviously that never happened, hereby negating the idea of considering selling around that area. Now, immediately price broke out of the structure, I did updated us on both my TradingView and Telegram platform that a breakout of this descending trend line will negate all bearish attempts. And to navigate the breakout of that descending trend line, we had this beautiful level here at the 1.275, which obviously had played a significant role in this market for quite some time. And for those of you who are familiar with our structure on the higher time frame, you will know what I'm talking about. So we had an opportunity to buy the breakout of the 1.275. We added more positions at the breakout of the resistant line of that range bound structure we saw at the beginning of the week. Then remember, we also added one more buy position at the breakout of the 1.27925 right here during the fourth hour of the New York session on Monday. So we were able to join 3 buy positions here, where the first buy position moved over 60 pips. The second buy position also moved over 58 pips, and the third one moved over 20 pips. And I did mention that we move all our stop losses to secure that buy position. And if you had done so, you must have been taken out with a minimum of about 60-80 pips thereabouts, depending on where you had moved your stop losses to. So we saw what happened on, I think, during the Asian session on Tuesday. Selling pressure resumed around the 1.2815, but I was not willing to join any bearish momentum at this point in time, though I got some messages, personal messages where some of us were considering taking advantage of that opportunity after identifying this double top structure around this area, which I said it was fine and good. At least it's a short-term trading opportunity. And I did updated us that I will be looking at the reaction of price action at two levels. For those of you who are familiar with my commentary on Tuesday, I said I will be looking out for a reversal setup around the 1.27925, and of course, if price breaks down that structure, then I will be looking out for a reversal setup between the 1.2755 and the 1.27500 area, which beautifully shares a confluence with this ascending trend line that you are seeing here. And immediately price came into the structure, we saw a reversal pattern on our lower time frame, giving us the opportunity to continue the uptrend. And I think I updated us with a simple setup on the 50 minutes time frame. I think that was on a different chart. Let's look at it together. Right here. Okay, it was right here. So I updated us with this one, and this led to that buy opportunity we took here. And look at what we have. Price action triggered that buy position and came back to do some retest of structure. For some of us, we still have this buy position running. I still have the buy position running at this point in time. Two of them, one from this level at the 1.27550 and the other one from the 1.2770 area, dovetailing to 20 pips and how many pips? 7 pips respectively. So for those of us who took advantage of this opportunity, well done and kudos to you. Now at this point in time, and considering the fact that this descending trend line appears to be a limiting factor for buyers in this market, it is appropriate that we move all our stop losses and secure some of these positions. Like the first buy position here, move your stop loss to anywhere around the 1.276. That's about 5 pips from the first entry. And of course the second position, to move the stop loss to 1.26 area, and that will be resulting in a loss of about 7 pips or 8 pips on that second position. So if we look at the net P&L, it will be a loss of about 3 pips thereabout. So at this juncture, we are at a crucial level. As you will see here, that the last 12 to 36 hours, the market has been consolidating. Look at what has been going on here. I was actually thinking that the second leg of the bullish momentum that started this week is about to happen. But what we are seeing here is a consolidation phase, which further emphasized the prevailing uncertainty in the market. Now, with a further introspection into this current structure, I'm of the opinion that this consolidation phase we are seeing here may be attributed to market participants waiting for today's US macroeconomic data before making any informed decision. So this is one of the things I'm thinking that could be the reason behind this consolidation phase we are seeing here. Then there are other major factors too that we should also consider. Remember the pound sterling started with a bullish momentum at the beginning of the week, but the UK retail sales data that came in on Monday, the BRC like for like retail sales data, wasn't that impressive, as we saw a less than expected data for the year ended in May, printing a 0.4% compared to the forecast of 1.2%. So you would agree that is not impressive at all. And I think this is one of the major reasons that the pound sterling is lacking that traction to ignite the second leg of that bullish momentum. So we need to be very, very careful around this area. That is why I said let's move our stop losses and secure this current position we have at this point in time. Now, secondly, from the US front, the JOLTS Job Opening report for April wasn't that good too as well. Came in at 8.059 million, down from the previous revised figure of 8.34. Now, though the labor sector is still looking very tight at this point, but I still think that it's not enough to drive the US dollar at this particular point in time. So it's reasonable to conclude that market participants are looking forward to the ADP employment data today, and of course the which other data is that again, from the economic, okay, the ISM services PMI, before making any informed decision. So we are looking at about 3 to 4 hours from now before we may likely see some significant traction in this particular market. So these levels here still remains a yardstick to guide our trading decisions for today. Now, if we go back into our first structure at the beginning of the week, let's go back to the 1 hour time frame of the GBPUSD that we analyzed at the beginning of the week. Look at what I have here. Look at this trend line here, please. This trend line here since last week Thursday, after connecting the series of higher lows, you can see price has been respecting that trend line, though we had a little bit of breakdown at the beginning of the week. But you will see within 4 to 5 hours, price action climbed back above that ascending trend line. And for me, I still think that the path of least resistance for the pound sterling is still looking very bullish at this point. Now, inflationary pressure is still high in the United Kingdom, and there is this speculation in the market that the Bank of England is likely going to maintain its current interest rate further during, I think, the interest rate decision for the Bank of England is coming in next week. I think, I'm not sure, that they're going to be maintaining this, and we know what happens when interest rate is high. Investors are attracted to that asset, as they would want to capitalize on the differential return on investment as regards to interest rate. So I still think the path of least resistance is bullish, especially after considering this expectation that Federal Reserve are likely going to be cutting interest rates soon, considering the not too impressive US economic data so far in the last couple of weeks. So with that being said, from a technical standpoint, I'm considering more buying opportunities, like the breakout of the 1.27925, the breakout of the 1.28125, which is the highest level for this week, to add more buy positions to our existing trade. However, if price breaks down this ascending trend line and we have some retest of structure, this could incite selling opportunities. And mind you, while we are joining this selling opportunity, we cannot ignore the fact that we still have a barrier right here, this descending trend line, which was broken on Monday. Remember, we had this descending trend line broken on Monday, and from a technical and theoretical standpoint, when price breaks out of a structure, we may likely see price come back to retest in an attempt to continue the uptrend. So in that regard, if we were going to be joining a bearish move at the breakdown retest of that ascending trend line, we are looking about a 40-45 pips move before price gets into the trend line. And as soon as price moves close to the trend line, we move all our stop losses, secure the current sell position, and wait and see how the market is going to be reacting to this descending trend line to determine if we are going to be adding more sell position or getting ready to buy. So the reaction we are going to be looking at around this descending trend line, if ever price breaks down this ascending trend line, is buy pressure, reversal pattern, maybe a double bottom structure, inverse head and shoulder pattern, or a falling wedge to join the uptrend continuation. However, if price breaks down and retests the trend line, then we will be looking out for more selling opportunity, where a further breakdown of our key level at the 1.2700 area will be welcoming more selling opportunity. But trust me, I will be with you in the comment section of both my Trading View and Telegram platform to give us update as at when due. So I do hope I made myself very clear on this. It might look a little bit complicated, but if you have your structures marked out on your chart, it makes it much more easier for you to monitor price action effectively. So that's why I do encourage us all to mark out these levels accordingly on your chart, so that you can use them independently to navigate the market effectively. So if you have any questions whatsoever, feel free to let me know. If you need some further clarifications, drop the comments in the comment section, and trust me, I'm here and willing to be of help in that regard. So I will be taking the next 10-15 seconds off. Let's see if there are any questions whatsoever before we move on to the final asset on our watch list for today. And do not forget to give the video a thumbs up. If you have found this content helpful, kindly support the channel by giving the video a thumbs up. We have over 21 people on board right now. Let's make the number of like tally with the number of people, and thank you very, very much as you do so. See you in about 10-15 seconds from now. All right, everyone. I guess in the absence of no questions, all I've said so far has been quite explanatory, very explanatory, enough for us to comprehend. In that regard, let's move on to the final asset on our watch list. Stay tuned. All right. So the final asset we are going to be looking at this morning is going to be my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And in fact, this week so far, we've had some interesting situations going on. I remember at the beginning of the week, we were buying this asset until the bearish momentum came in yesterday, and of course we took advantage of some of the positions before another wave of bullish momentum came in. So it has been a roller coaster of buys, sells, and buys through the course of the week, which further emphasized the level of indecision going on in the market lately. However, from a emotional perspective, from a personal perspective, I still think that the path of least resistance is still looking very bullish, considering the expectations that the Federal Reserve will start cutting interest rate later this year, which is further bolstered by the softer U.S. macroeconomic data we have been seeing from the U.S. economic docket in the last couple of weeks. Now, this expectation also has affected the U.S. Treasury bond yield, as the U.S. Treasury bond yield currently is struggling to gain traction. And of course, we know how the U.S. Treasury bond yield is directly proportional in value to the U.S. dollar. So if the U.S. Treasury bond yield is not doing very well, the dollar is expected not to do well. If the U.S. Treasury bond yield is doing very well, then we expect the U.S. dollar to do very well as well. Now, at the beginning of the week, we had this whole interesting situation here where price action was initially confined within the $2,331 area. That was our first resistance point for the week. And then we had the support line of that range bound structure, had the $2,323.50 level, just right around or close to our week's key level, had the 2,325. So my key levels are always the ones that you see on the chart with a pink color. Now, this level here had played a significant role on the higher time frame. For those of you who saw my weekend video on the XAUUSD, where you will be familiar with the structure. So for those of you who missed out on it, please check the link right in the description box below to have an insight into how we were able to identify this level. And a quick reminder, our key level serves as a yardstick to guide our trading activities for every week. Now, when price remains above the key level, we want to be looking out for patterns and structures that supports the idea of buying that asset. And if you look at the structure closely, you will see that the major part of this week, price action had maintained momentum above the key level, which further supports the bullish traction in this particular market. So with the situation here, we were able to have our first buy position at the breakout of the key level on Monday. Then we added multiple entries. Remember, we added one at the breakout of the 2,331. We added another one at the breakout of the 2,340, and of course we added a fourth one at the breakout of the 2,348 level, which closed at break even after we moved our stop losses accordingly. So for the first day of the week, of course, we were able to scoop in about 230 on the first one, second one about 175, the third one about 80 pips. So we had roughly over 400 pips to catch on the first day of this week, which was quite reasonable, at least for the first half of the week. Making over 400 pips on the gold is quite impressive, and for those of us who capitalize on this opportunity, well done and kudos to you. Now, during our live session yesterday, okay, we never had a live session yesterday, of course. We had I shared some commentaries on my TradingView and Telegram platform, most especially on the lower time frame after monitoring the character of price action, and I was able to come up with a simple trading setup after observing this this situation on the 15 minutes time frame. So let's look at this together. Now, I saw the situation here after considering the character of price action since the beginning of the week. As you will see, we have a beautiful ascending trend line after connecting the series of higher lows, and
projecting that into this area gave us this one. So we saw this first ascending trend line broken right here. I missed out on that sell opportunity. I didn't sell the XAUUSD at all, considering the fact that I was of a strong feeling that the momentum is still looking very bullish, and I do not want to commit myself into a movement that is against the majority of market expectations. Like I told you earlier, there is a strong feeling in the market right now that the Feds are likely going to be cutting interest rate anytime soon due to the recent data we saw from the United States economic docket. Now, this is one reason why majority are also looking forward to the ADP and then the US service PMI reports, and of course the NFP later on Friday, to give an insight into what the market is going to do. So as a result, we are seeing some choppy market conditions going on at this point in time. So we saw the first one broken, we saw the second one broken here, and yesterday I said we will be based on this current structure here. I had this range bound structure between the 2,335 and the 2,325 level, giving us an insight into the indecision that happened during the early hours of yesterday's trading session. And due to this, I was of a strong feeling that we might be seeing the emergence of buy pressure, especially when price is sitting above our week's key level at the 2,325, and you can still remember how important this level is for us. So as a result of this, I had a buy position triggered, had the breakout of the 2,335 level. In fact, price moved barely, how many pips? About 30 pips thereabout, but it didn't last long before the bearish momentum came in, taking us out of that buy position in a loss. So we recorded our first loss on the XAUUSD right here yesterday, and afterwards we saw price trigger the sell position, had the breakdown of the 2,325, and we saw price moved about how many pips was that? About 96 pips in profit. And I can remember informing us all on both my TradingView and Telegram platform to move all stop losses to secure that position. And if you had done so, you must have been taken out with some reasonable amount of profit. I just hope you are able to recoup the loss we had on the buy position yesterday. But still, with that loss, we are still on the positive side of our portfolio. Then later on, price came back to retest the structure, triggered, and that one unfortunately went into a loss. So as at yesterday's trading session, we had two losses on the XAUUSD, which is still quite okay considering what we have made so far this week. So with the second half in the corner right now, let's hope that we will see some beautiful traction to recoup some of these losses and of course make some more profit on top of it. Now for today's trading session, after considering the character of price action since last week, I was able to identify a new trading setup. For those of you who are with me on both my TradingView and Telegram platform, you would have seen that setup. But before we go into that trading setup, let's quickly run through the major drivers of this market. What are the market drivers that will be influencing the sentiment in the gold market? And I was able to come up with some couple of highlights which I would love you to see. And if you look at this here, the first one, we talked about this, the Federal Reserve rate cut expectation, as we have growing acceptance that the Federal Reserve will likely cut interest rate anytime soon. And this of course has not favored the US dollar as well. And we all know if there's going to be rate cuts, investors will start pulling their funds out of the US dollar and then putting it into safe haven assets such as gold. Then another factor that could influence the gold market positively for the remainder part of this week is the geopolitical risk. We all know the ongoing tensions in the Middle East at this point in time, as we are yet to get a resolution as regards to this. And of course, we know how such geopolitical turmoil usually increase the appeal for safe haven assets. Then we also have some upcoming economic report from the US. We had the JOLTS report yesterday, which wasn't that impressive at all, giving us an insight into the US economy is still struggling at this particular point in time, and this indicator here reinforced expectation that the Fed may cut interest rates, and this will further support the appeal for safe haven assets, hereby supporting the price of gold to rise. Then another one we are looking forward to is the ADP employment change coming up later today, and the ISM service PMI. So from the report that comes out today, I think we will be having a little bit of insight into what is going on in the United States, and this will give us a clue of what the Feds are likely going to be doing. And I'm not sure if we have any Fed speeches for this week, because I will be willing to hear something from Fed policymakers as regards to what their plans are, considering this recent economic data from the United States. So these are the major drivers for me, and if you will ask me, the path of least resistance for gold is still looking to the upside. Now, like I said earlier, I have a new setup on this chart which we are going to be using to guide our trading decisions for the remainder part of this week. Now, if you look at the structure here, what I did was to take into consideration the character of price action since on the 23rd of May, that's about 2 weeks ago. And if you look at this closely, you will see that price action has been consolidating, and in fact it is within a descending channel. Oh my goodness. So please give me a moment, please. I just had a blackout right now, so I will be right back in a moment. Thank you very much. All right, so I'm sorry for that break. I had a blackout, which I was surprised at what happened as regards to that, but I hope that we'll be able to last long with the inverter right on running. So like I was saying earlier, we have the simple descending channel, which is going to be playing a major key role in guiding our trading decisions for today. As you will see, after connecting the series of lower highs in the last 2 weeks now, we have the resistant line of that descending channel, and then we have the support line of that descending channel after connecting the series of lower lows. Now, besides this descending channel, we can see despite price moving towards the downside, our price is moving towards our key level, remember, which is situated at a 2,325 level, which is also doubling as a temporary demand zone, at least in the meantime. This level here has played a key major role in pushing price to the upside in the past. For those of you who saw my weekend video on the XAUUSD, you will acknowledge to this fact. Now, with the situation we have here, what I was able to come up with is the fact that ever since 2 weeks ago, we have seen how it has become difficult for sellers to break through that area. Now, though we saw the momentum gradually dropping lower and lower, as you will see here, but yesterday we saw that as soon as price got here, we saw a bullish engulfing candle bringing price back to the upside and floating right above our key level. Now, you know how we use our key levels in this community. As long as price remains above the key level, we want to be looking out for patterns and structures that supports the idea of buying that asset. And now, considering the fact that we have a demand zone between the 2,325 and the 2,315, it doesn't make any sense for us to start considering selling right above a demand zone. So as a result of this observation here, I'm of the opinion that we should be looking out for buying opportunity, especially after we have considered the fundamental factors behind the scene, which obviously is pointing at the upside for the gold asset. So it depends on what happens today anyways, depends on the data from the United States. Let's see how the market is going to be reacting to that data. So in preparation for today's US macroeconomic data, we have important levels here that we are going to be using to guide our trading decisions. So we have the $2,335.50 level, a level which has been a demand zone in the past. If we go to as far back as the last week of the month of May, you will see how this area has been playing a major role in pushing price to the upside. Now, and during the Asian session today, we saw price break out of that structure a little bit, but we saw price drop further to the downside, which is a sign that major key players are not willing to place any directional bets until the US macroeconomic data event comes in. So as a result, if price can climb back above the $2,335.50 level, I am willing to buy the XAUUSD. Then I will be looking out for more opportunities to maximize the potential of this bullish move at the breakout of the 2,345. And look at how beautifully that 2,345 area shares a confluence with the resistant line of that descending channel. So if price can break out of the descending channel, this will be the first time price will be breaking out of that structure in the last couple of weeks, giving me a very good signal that we are going all the way up. But trust me, I will be with you in the comment section to guide you accordingly. Now, in as much as we're looking out for buying opportunities, remember that we cannot ignore the potentials that sellers can also come in. And in fact, for me to consider selling the XAUUSD today, I would rather want to see price action break and slice through this demand zone at the between the $2,325 area and the 2,315. So I would like to see price drop below the structure before I can start considering selling. And to do this, I want to see price drop and break down the support line of that descending channel, which beautifully shares a confluence with the $2,315 area. So a breakdown of this structure for me would be a beautiful signal to join a decline to the downside. However, That does not mean that we can't see any sell opportunity before the breakdown happens. That's only if I can see consistent and uniform series of lower lows and lower highs prior to that area, then we could take advantage of that. But trust me, I will be giving us updates if I see any of such structure emerge on this particular chart. And that reminds me, we are going to be running the XAUUSD live window later today, so it's another opportunity for us to be part of the real-time monitoring of the XAUUSD. And for those of you who do not know what the XAUUSD live window is all about, it is a platform that was born out of popular demand from members of this community, where we come together to monitor in real time price action of the XAUUSD during the New York session. So it usually starts about 5 to 10 minutes into the New York session and lasts for about 5 to 7 hours, depending on the volume of trading activity for that particular day. So I look forward to seeing you guys on the XAUUSD live window, where we come together to monitor real-time price action during the New York session. So this is my simple view on the XAUUSD for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions whatsoever before we round off today's Forex Money Mastery. And I really want to appreciate every single one of you for the support you have given the video this session so far. Your likes have been very, very encouraging and inspiring. Thank you very much from the bottom of my heart. So let's see if there are any questions, and then we shall be going ahead to round off on today's Forex Money Mastery. See you in about 10-15 seconds from now. All right. So, okay, I see you, Salami Olumide. I'm very glad that you found this content helpful, and I do hope you have clicked on the like button just to support this community. And thank you very much as you do so. So, in the absence of no further questions, I'm of the opinion that we have come to the end of today's Forex Money Mastery. In fact, it has been a wonderful moment with you guys. I really appreciate every single moment I shared with you guys today. And for those who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. I see you, Sake Balata. You are very much welcome. So far today, we were able to attend to the three financial instruments that we have been monitoring since the beginning of the week, which includes the USOILSPOT, the XAUUSD, and of course the GBPUSD, all of which we have been able to identify simple trading setup using our basic tools such as the economic calendar, trend lines, key levels, and chart patterns to unravel the potential trajectory for price action today. And I do hope you are able to mark out these levels accordingly on your chart. If you have done so, well done and kudos to you, as they're going to be playing a significant role in helping us guide our independent trading decisions. So all we need to do right now is exercise patience, sit back and wait for these structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, ensure you have a well-defined risk management strategy in place to mitigate your risk. For those of you joining us for the first time today, I do hope you are able to gain one or two things from what we discussed here today. If you have done so and you've gained something, well, I look forward to seeing more of you in our subsequent editions. Trust me, the more time you spend with us in this community, the better you get to comprehend my analytical approach, which eventually will help you in making your own independent trading decisions. I look forward to seeing more of you same time on Friday, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing and of course prepare ourselves for the final trading day of the week, which usually has its own level of volatility, as market participants will be rounding up their trading activities ahead of the weekend. So it's not a session you want to miss out on as we prepare for this rounding up of trading activities. So it's on this note I would like to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.